Hi, good morning, everyone. Welcome to this live show called One Good Trade. If you guys can see and hear me loud and clear, I think some of you have already joined us and you're early. Just type a GM for good morning. Let me know, guys. Type a GM for good morning. And so I see that this live show is working today. Let me know. Just type a GM for good morning. And let me acknowledge all of you for being early today. Welcome to the One Good Trade live show. And today I have a very special guest here as well. Later I'll introduce you guys to this very special guest, all right? And how she will add more value to you guys in today's live session, all right? Good morning. We have David. Hi, good morning. Lianka, hi, Ahyok, Stephen, Alan, John, Frederick, Alex. Very good, guys. Good morning, Andy, Pauline, Saraju. All right, good morning. Good morning. Welcome, guys. Welcome to the One Good Trade live show. So this is slightly different from, our Friday weekly AMAS show, okay? And why is this slightly different? Well, every Friday, right, we do what we call the Ask Me Any Stocks, right? Whether is it the Singapore or the US market, but essentially today is slightly different. So Friday, we will cover the stocks that you guys want a quick opinion on, and then we'll share like some of the top stocks at the end. But today, all right, I don't have my team here with me, Bervin and Z. Will not be covering your stocks, unfortunately, right? But I'll be sharing with you guys one Singapore stock, right? I call it a pretty resilient Singapore stock that has been in my watch list for quite a while, all right, and that can potentially offer more upside, all right. So that is one stock, but more importantly, after sharing with you guys this stock, right, I have a very special guest right here today, Jamie. All right, Jamie, let me go ahead to invite Jamie on the stage. Jamie, hi, Jamie. Just say hi, Jamie, to
Hello,
everyone.
everyone. Hello.
Yes.
We're at the start of a new quarter and happy to be back with Joey on this One Good Trade live show. The last time we spoke with you was on the 13th of March, before the whole, market basically big down move as a result of the tariff news. And so, excited to be back here as the market is, still trying to recover from just that big move that we saw in April, and keen to hear what Joey has to share. But Joey, the last time we were here on this show, you basically talked about a stock, JD.com, right?
Yep.
Where the target price of around, I believe, 180 to 190 was really close, where the stock traded up to about $177, if I'm not wrong, just a few days after the show, before it tumbled along with, just global shares, right?
Most every other
Go
stock.
below your cut loss level of 150. So, would you like to do a recap for myself as well as those who have followed you on, this call on JD.com, and what would have happened during this period where you were looking at it? What did you do? I guess
Definitely. Yeah, we could do a recap. We could do a recap on the stock that was covered last month on JD.com, whereby, Jamie, same thing, came on board as well and shared her views, how you can use warrants. And same thing, guys, in today's show, right, stay all the way to the end because Jamie, same thing, I'm going to share with you guys after doing a quick recap on JD.com. I'll share with you guys one Singapore stock, resilient stock, that can potentially offer more upside. And Jamie will come in to share with you guys how you can use warrants, right, structured warrants by Macquarie to potentially increase your ROI. So Jamie's a special expert right here on warrants, guys. If you have any questions on warrants, she's the go-to expert. So make sure you ask your questions at the end as well if you have any questions, right? So this show is sponsored by Macquarie, all right? Jamie right over here. And let's get right into it, right? We have a quick disclaimer, right? So whatever that's being shared today, the usual disclaimer just for education purpose only, all right? So please do your own due diligence, right? Not really to ask you to buy or sell, or not to buy or not to sell anything, all right? So please do a bit of homework as well, all right? The standard disclaimer. So let me go ahead right now, and we can do a quick recap on JD.com. So those of you who have been following us, right? We try to do this One Good Trade live show, right? So this is different, guys, as I say, from my Friday weekly Ask Me Any Stock, right? This is pretty much just kind of like a quick collaboration with Jamie, right, to come a bit and talk a little bit more on warrants, all right, and not just warrants by itself as a product, but more like an idea and how warrants can come in to complement or supplement that particular idea, right, to potentially get a higher ROI. All right, so it's a bit different. So right now I'll do a quick recap on JD.com. So you can see this is JD.com, right? One of the tech e-commerce play in China. All right, you see that we are trading about 130 Hong Kong dollars. So let me do a quick recap. You can see that, when we covered this stock just last month, we were actually holding quite well above the 150, right? 150. I think we covered it somewhere around here. I think in March, right? It was like holding really well above the 150 support level. All right. So I think I covered somewhere over here. It actually did rebound. A few days later, all the way up to near the target. So our target was, I think, about 180. As I mentioned, and 180 was where we could potentially see some selling coming back. And yeah, we neared it to like about 174, 175, right? Around there. And what happens? Well, there were some talks about tariffs, all right, in terms of Donald Trump introducing tariffs. Market got a bit weaker. And of course, we actually broke down the 150 support level on the, what day is this? I think on the 4th or 7th April. Yeah, I think that day almost every stock went down. The market went down by 5%. Even Singapore got hit as well. All right. And that was when Donald Trump actually introduced what we call reciprocal tariffs on a dozen of countries. And of course, in China, it has escalated up to like 145% tariffs, right? So that was where everything came down and we broke this 150 support level. So that was the call mid, right? Mid the call, right? Went up all the way to near target, but unfortunately, came down a little bit and we broke the support. So what we can do right now is I can turn on what we call the One Good Trend Pro indicator. So those of you who have been following us in our live show, I share with you guys on the One Good Trend strategy and how based on this strategy I have an indicator whereby not just JD.com but on any stocks, whether it's a US stock, Singapore stocks, what you can turn it on and get an opinion in seconds. So you'll find a bit more, guys. Today we have time to cover all the entire strategy or perhaps how you could have access to this indicator. But if you want to find out more, can attend one of those free webinars. The link is in the chat. I've just placed the link in the chat. Check it out. All right, but let me turn on what we call the buy and sell signal. Let me turn it on. There we go. So you can see this is JD.com. Well, we had a couple of bullish signals in August. Look at this pump, went all the way up. A bearish signal starts coming down. And in January 2025, we've got 1, 2, 3, 4 bullish signals right over here, all the way up. All right. Target, and of course we started to sell down. I think about 20% upside, sell down, and you can see over the past 3 weeks, right? Over the past 3 weeks, well, we actually had a bearish signal coming out. So we got a bearish signal. Well, why? Well, because we broke the $150 support level, all right, that I mentioned just now as well. So that's where we got a bearish signal. You can see that the trend in the short term, look at this green line. So this green 20 days moving average line that represents the short-term trend was actually pointing up. Very good, right? We covered it, went up somewhat, right? But talks about tariffs came in somewhere in March. April slowed down more when Trump actually introduced it. And there we go. The green line started to point down. Is it still pointing down right now? Well, I would say this 20 days moving average line is unfortunately still pointing down right now. So not entirely out of the woods yet. So what happens is that if you've got in, the warrants, right? Just by looking at the underlying, maybe above the 150 support. If you have taken steps to protect your profits, great. You have already got out, all right? In terms of warrants, I think it would be more than 10% kind of returns. But if you did not get out, what happens is that we want to have a stop loss. We want to have a stop loss, as I mentioned, right? We could put a stop loss below what we call a very key support level, like the $150. So, if you have broke the 150, probably get out, all right? And that's where we could see even more weakness. You can see that we have hit it a little bit lower right now, about $129. All right, so this is JD.com. Just a quick recap as to what has happened over the past few months based on when we covered it, why we covered it, and why it has came down. And my take going forward, I would say still a little bit weaker, not out of the woods. We want to wait for maybe a new bullish signal to come back, or maybe for the green 20 days moving average line that is still pointing down to maybe hopefully flatten out. All right, I think that will give a bit more confirmation of some stability, all right, or maybe a bottom being found, and then we can get ready to maybe get back in again when the time comes. All right, so Jimmy, maybe you can share with us a little bit on the JD.com after doing a quick recap. I mean, like on the warrants. What?
Yeah, sure. So just to share my screen, previously the warrant we talked about on the show that was related to JD.com was this JD call warrant 44PW, which at that point where we had covered on during the live show was about 5 cents Singapore dollars. And that was when JD was trading above the support level of $150. And that's where Joey talked about, his potential target price of $180. And actually not too many days later, in fact, I think just only 4 days later now, actually 5 days later, it traded very close to the $180 target price. It went up 13% from when we covered JD.com shares and Joey's view on it. It went up 13%. Now, if you had traded with this warrant entering at around 5 cents Sing dollars, during this time, it would have gone up 64% from 5 cents to 8.2 cents. So that would have been around about 5 times of the return versus JD.com shares. But as Joey said, if you had not gotten out because it had not gotten to 180 yet, what happened was then of course Trump happened, the tariff news, and actually where it fell below the support level of 150 and below the cut loss level of around $140, which Joey talked about. And if you had cut your loss here with the stock down about 20%, very painful, but something you need to do in this sort of markets, right? In this case, the warrant would also have amplified the losses, right? Because warrants basically magnify the returns on the shares. And it would have fallen 72% from 5 cents to 1.4 cents. So this is an example of how warrants can magnify your returns when your view is right, but when your view is wrong, similarly, it's also going to magnify your losses. So something you need to take note of. Like I said, very expensive to cut losses, 72%. But just recall sometimes, and I've mentioned this before, if you don't cut your losses, it becomes 100% loss. So, use whatever you have left out of this capital to potentially reinvest via another warrant or another stock idea, for example, that Joey will talk about today. Or you could also, if you're keen on JD, just like Joey said, continue to wait for the trend to turn positive again, to potentially use the warrant to magnify back the returns that hopefully will cover the losses that you might have suffered as a result of entering in this call warrant. Okay, so Joey, on that note, I think we're very excited to know what is the one good trade that we can potentially look at in these markets. Obviously, we know the worst is not over yet. The tariffs are still in place. Maybe there's a bit of a relief rally because markets, were hammered so badly, right? But what is one stock, what is one reliable stock you think we could be looking at potentially in this sort of markets, just as a short-term trade?
All right, thank you so much, Jamie. But let me add on a little bit on before I talk about this new Singapore stock. Let me add on a little bit on what Jamie has mentioned just now on JD.com. So remember, guys, for JD.com, right, the underlying went up by about 13%. All right, of course, near the target. All right, Trump came out and talk about some tariffs came down, but based on the 13% rise in the underlying stock. Well, Jamie, I think you mentioned that the warrant went up by 60%, correct? I think
that's right. That's correct.
Exactly. So guys, take note for warrants, right? You don't want to be greedy, right? You don't want to be greedy because it's like, more than 4 or 5 times of the underlying gains. So 64% definitely would be a very, very, decent gains really. So you want to take steps to definitely protect your profits. You don't want it to wait for the price to come back down and erase the profits from the warrants, from the gains of riding the warrants. Does it make sense? All right. So this warrants is pretty much a very short-term gain. So don't just hold it blindly. You want to take steps to protect your profits, especially if it's more than 20, 30, 40, this is like 60%, right? So anything more than 20, 30%, I think you want to take that to protect your profit. So in case it comes down, all right, you get out on the warrants, you still make money. All right, so just want to share a little bit on the strategy on the part. So you don't want to let it go all the way back down and from gain to loss. No, don't do that, all right? Even with a 60% gain, right? You protect it, you make a 30% or 40%, good enough, all right, Ken? So this one I add on that. All right, so very good. Now that we have talked about a quick recap on JD.com, let me go ahead, guys, to share with you one Singapore stock that I've came to my watch list over the past few weeks. I think it's been pretty resilient, all right, started to push a little bit higher. We shared it with our VIP clients in Philips Securities as well, all right, and I think you want to watch this Singapore stock, right? So how many of you want me to share with you guys this top Singapore stock, this type of T, guys, type of T to chat for top. If you want me to share with you guys this top stock, and Jamie will come in later as well to share with you her opinion on how warrants, right, can come in, right, to potentially increase your returns. Right, this type of T for top, let me know. All right, good to see some of our familiar, Kakis joining us every Friday as well over here. Hi, Idris, Frederick, Ahyok, hi, John, Idris, top. Okay, very good. So let me share with you guys. Hi, Fiona, good to see you here as well. All right, so let me share with you guys this stock that has came into my watch list. And this stock is none other than SGX, right? Singapore Exchange. Right over here, Singapore Exchange. So you can see this is SGX trading at about $14.33, right? So why do I like this stock? Well, let me just break it down for you, right? Based on my one good trend strategy. All right, I'll just going to share my screen right now. Okay, so this is SGX right here, $14.33. So you can see, right, for SGX, well, in terms of the longer term trend, we want to focus on what we call the 100 days moving average line right over here and the 200 days moving average line. So you can see, right, both of these lines have been pointing up. The red is above the blue. So SGX has actually been a longer term uptrend since like August last year. All right, not last week or last month, guys. August last year, we have already been in a longer term uptrend, just really starting to happen. Well, let me just show you right over here. So I covered it on YouTube as well. Clients were alerted to it as well. But you can see when we actually broke this resistance at about the 950 to $10 mark. So we were actually consolidating. Look at this, right? It was a bit boring, I would say, from 2023 to 2024. We were actually consolidating below the 950, 960 kind of resistance. Look at this, right? Came down. The red and the blue lines was boring. You see, like the red and blue line was just pretty much moving sideways. So if you ask me, in like last year, January or May, I would say it's a bit boring, probably not want to buy, it's not really moving, it's just moving up and down, right? A bit boring, nothing much, right? But somewhere around August, right, we actually broke the resistance, right? And I talk about it as well, clients were alerted and we broke this 960 and even the $10 resistance gave way, all right, over here. You can see, right, the red and the blue line started to point, from flat all the way to up. As to, right now we are still pointing up. So the longer term trend has been up since August. Is it still up now? Yes, it is still up right now. Of course, in the short term, we did see a couple of sell down, right? It was a bit of a sell down right over here in like December, a bit of a sell down here in March, because everything sold off when Trump introduced tariffs. Look at this, right? Everything sold off right over here. All right, when was 7th April. So 4th April, 7th April, I'll not forget the date, but that was one of the days whereby the market really sold off. I think almost no stocks were spared, right? Almost every stock came down. All right, when markets sold off, people just panic sell, and then it came down. So long-term trend was up, but in the short term, we did see a couple of weakness. But overall, you can see that actually we traced back down. We actually managed to push even higher. Can you see, guys? Even higher. So we have been actually attempting to not just break the resistance or maybe just stay below a resistance, but to actually break a very key obstacle and attempting to push higher, and more importantly, stay higher as well. And that's how the uptrend works. That's how an uptrend works, right? So you can see that we have been pretty much going lower, buyers came back, and it goes even higher, right? So long-term trend is up. In the short term, well, you see that it was down previously, down a little bit, but right now, just by looking at the green 20 days moving average line, you can see, right? So this green 20 days moving average line that represents the short-term trend, all right? It was like down, up, flat, down a little bit when everything sold off last week, all right? And now it started to point up, right over here. So I would say that the trend in the longer term and the short term is up for SGX right now. So what I can do right now is to turn on what we call the bullish and bearish signals from my one good trend pro indicator. So as I say, right, I have this indicator. The backbone of it is the one good trend strategy. Let me turn it on. And in a matter of seconds, you can see that we actually had a couple of bullish and even bearish signals coming out on SGX since last year. So the very first bullish signal, I think that really sparked the whole entire move, as mentioned, right? In August, the trend was like flat, and then we got a bullish signal all the way from here in August, all the way up. Another bullish signal went up even more. Pump right over here, we got a bearish signal. So also like a 36% upside or gains in just about 6 months, right? 36% in about 6 months, 5 to 6 months, right? And then we went sideways to a bearish signal, went sideways a bit bearish signal when everything sold off, right? That was when on the 7th of April, we actually got a bearish signal. But over the past, I would say 3 weeks, well, we have not one, but we have two bullish 1 GT signals coming out right away. So not too bad, right? Got two confirmations of the short-term trend, pointing up as well. All right, two bullish signals came out. The green 20 days moving average line as another confirmation also started to point up. All right, so I think not too bad. We are starting to move a little bit higher. We are pretty much at a higher phase right now with a higher support level. So if I can draw this horizontal support level right over here, I think that would be a support level for SGX, right? Singapore Exchange, $14. So $14 was a resistance. Look at this, right? That was where we were in February, sold off. Let me just draw it for you, right? So you can see right over here, we came down, same thing, we came down, all right? But finally, over the past 2 weeks, we managed to break above that $14 psychological resistance level, right? And that would now be a new support level. So you can see when we broke 14, we actually got another bullish 1 GT signal. So not too bad, not too bad. I think that's where it still looks pretty good above $14. And maybe targets, what we could do is just to do a little bit of a projection. You can see, right? That was kind of like the range we've consolidated over the past 2 to 3 months. So that would be the range, right? I would say maybe from like 12 to $14. I can just do a little bit of a projection right over here. Well, I think upside targets could be revised maybe all the way to that $16. I think $16 or maybe even $15. So $16 or maybe $15 could be a near-term resistance level as well. I think that could be a targets from here, right, all the way to $15 to $16, as long as the $14 psychological support level holds, right? So this is SGX. I think looks pretty good, right? I think two bullish signals playing out, short-term trend turning up, and everything seems to be in play. And what we could do, guys, is I can turn on what we call the trailing support as well. So you can see right over here, this is a trailing support level. So you see, right, when we first got the bullish signal. Okay, I tell you what, let me just go back. Maybe let's go back to right over here in August, over here, right, over here. So when we've got the bullish signal in August, look at this, guys. I want to explain to you guys this concept on the trailing support line. You can see, right? So this is the trailing support that is actually below the price, below SGX price. But as SGX moves higher, it follows it as it moves up, all right? While not following too tightly and too closely and not giving it space, but following it and giving it space to breathe as it moves higher. So this is what the trading support is about. It accounts for the volatility of any stock, any asset classes, and it gives the stock what we call the breathing allowance to hopefully move higher. And if you're above it, you're good, right? You're good, right? It gives you the space to hopefully move higher, right? So you can see the trading support follow, flat, up, follow, flat, follow some more, and pump. Why did we have a bearish signal? Well, because we actually broke down below the trailing support. So if we give you space and you're supposed to be above it, but then you go below it, that means you're a little bit shaky, right? That means there's some serious selling pressure. You might want to take some profit. You might want to get out. Does it make sense? All right. So there's a trailing support level that happened from August that follows it all the way to February. All right. About 5 to 6, in fact, about 6 months, right? Right over here. Okay. So there was a trailing support. So let's go back to what happened. You can see that over the past 3 weeks, well, we got the first bullish signal. And the trailing support has popped out. Look at this, right? It's following it as it moves up. I mean, it just started only, right? So you just follow it flat. Now it's starting to follow it and move up a little more. So you can see there's a bit of space, right? Like, for this trailing support, you can see there's some space between the price and the trailing support. Why? Because there's space that accounts for volatility. You don't want to follow too tightly, and then prices comes down, you get out for nothing, right? No. So we give it just enough space, and it accounts for volatility. So right now you can see that this trailing support actually is below the price, right? There's some space, right? Look at it, there's some space. So the trailing support is right over here at about the $13.20. So there's a little more space, but I don't even think it will go to I'm not too sure whether it will go to $13.20, but right now $14, as I mentioned, already has came out as a near-term horizontal support. But as long as we stay above this trailing support that accounts for the space, or maybe even above the $14, right, it's higher, I think it still looks pretty bullish. All right, we could potentially see more legs to this rally. All right, and in terms of the uptrend being up, uptrend intact for both the longer term and also the short term as well. All right, so this is SGX. Our SGX right now 14.34. So anything above 14, it could be $14. In fact, over the past 1 week, right, as we approach this $14. So this is part of the one good trend strategy as well. Another step that we'll look at as well. But we actually saw some bullish candlestick coming in near $14 as we headed there. So you can see buyers are starting to come back out, right, to defend the $14. So you see a long lower shadow, pretty good, what we call doji, a bullish spinning top right over here, a couple of bullish candles as we hit it down. So not too bad, not too bad. That is another confirmation that $14 could be a meaningful support level for now. All right, so now that I've covered this stock, guys, let me go ahead to pass on the mic to Jamie, all right, to share with you guys as to how, I mean, you can just buy the stock, SGX, underlying stock by itself, but how you can actually take a position in what we call warrants to potentially increase your ROI. So just by looking at this, right, upside targets from the underlying. For example, let's assume you got in near 14, 14.5, 14.10, 14.15, 14.20, right over here, and all the way up to maybe $16 target, a near-term target, about 13% upside. But what if you use warrants? Would it be 13? Would it be 20, 30, 40, 50%? All right, let's go to find out. So I'll invite Jamie to come on board to share with you guys on how you could take a position on SGX using warrants. Jamie, all yours, go ahead.
Thanks, Joey. Now, I think first of all, yes, indeed, you can buy the shares, but bear in mind that SGX is $14. So, even 1,000 shares would cost you about $14,000 in terms of capital outlay. I don't know if in this market, after, potentially some investors who might have been hurt from the sell down, I think not many of us were spared actually. And in this case, many people might be just a little bit inclined on, coming out with less capital to invest in markets. Because let's be honest, right, it is still, a market that is very unsettling, right? I mean, one text or one tweet from Trump can change everything. So I think if you are a little bit worried, or if you are worried about coming out with too much capital in this market and you're looking for an alternative, then I would say in order to trade the moves that Joey has shared, potential moves that Joey has shared on SGX, then instead of coming out with 14,000, you can potentially look at using a call warrant at a fraction of the underlying capital that you have to put up, to trade the move instead. So let me just quickly show you my website, warrants.com.sg, which is a website I think is necessary for you to use if you're trading warrants alongside your trading brokerage platform, whether it's Poems or any other brokerage trading platform. Okay, you can't trade on warrants.com.sg, but what it will tell you is how the warrants will potentially perform. So let's quickly look at the SGX call warrant. In this case, I want to show you this tab called the historical performance tab, just to see how a SGX call warrant has performed, over this period since it's listed. Now there is what we call a trending SGX call warrant right now. What does trending mean? It means that it's a warrant with the tightest spread and the highest liquidity. And how do you know if it's trending? Well, before that, there is the warrant search page where if you go to SGX, you mainly look for the warrant with a fire logo. In this case, it tells you YCNW, right? If you click into it, it takes you back to where I was trying to show you, which is the historical performance tab. Okay, here. And what it's going to say is that since it listed on the 17th of February, okay, so it did not exist before that. So unfortunately, I can't show you the performance of it since November, where Joey first mentioned SGX. In this case, until now, SGX will have gone up 10.5%. And this warrant, which at that point cost only 4.8 cents, rather than about $13. So again, instead of using potentially $13,000 to trade SGX shares in February, you only needed to use 4.8 cents. So really only a fraction, okay, of what you need to pay up for the shares otherwise. And you would have made 52.1% over this last basically 2.5 months, with the SGX shares going up about 10.5%. So it's about close to about 5 times more and a little bit more. 5 times more. Now, I think we want to forward project, right? Because those of us who haven't gotten SGX now want to know how we can use this warrant to trade a move of SGX, from its current maybe about $14.33 to potentially $16. And in this case, there are a couple of tools you can use. They are the warrant calculator tool, which some of you might already be familiar with. But we also introduced a new tool called the exposure simulator. We introduced that last month, and I had demonstrated that last month via JD.com warrants already. But I just want to use it again, to introduce it to those who are looking to I would say simulate the kind of exposure that they will otherwise have via the shares, right? So like we said, you can directly buy SGX shares. So in this case, for example, if you were looking to buy, say, 7,000 of SGX shares, to get a potential exposure of $100,000, right? I mean, if you buy $7,000 shares, simply put, at the current price of 14.34, you will need to spend $100,000 and a bit more, right, to buy the shares to participate in this upside move, to be a SGX shareholder. However, if you were looking at this warrant instead, this call warrant here, which costs 7.3 cents right now, and has a gearing of around 6.2 times. What does this mean? This means that this warrant will roughly move about 6 times more than SGX shares. So if SGX shares move about 1%, this warrant should approximately move about 6.2% more at the current share price level. Well, if you're interested in such a warrant, then you only need to use $16,200. Well, to be exact, $16,190 to replicate share portfolio exposure of $100,000. Why is that? Well, because if this warrant moves about 6.2 times more, then you need to invest 6.2 times less, right, to get an equivalent exposure. If you invested the full share price capital of 100,000, then your exposure will be a lot more, which is why I was saying if you don't want to spend about more than $100,000 to buy SGX shares, you can, in a short term, replicate your exposure with just $16,000, okay, to replicate this position. How many units of this warrant does it translate to? It's about 221,000 and 800 units. So basically, on your trading platform, you look for this warrant, you want to buy at 7.3 cents, and you type in this number of warrants to buy. Okay, in this case, it will try to simulate SGX's exposure. How will it simulate? Well, if you scroll further down, in order to simulate how it would move or what kind of potential gains it will give you, you need to type in your target profit level, right? With warrants, you need to exit as you would with shares when your target level has been reached. You need to know what your entry is, which in this case, if you're happy to enter now, okay, it's 14.34. You need to know where you want to profit take, because it's not like shares, they don't last forever. Warrants have the expiry date. In this case, it expires when? It expires on the 26th of September. Okay, you read it backwards here. So it doesn't last forever, and also because it magnifies the move. So where your cut loss levels have been met, you need to also cut loss in the warrant rather than hold on to it forever and hope that one day it goes up to your target levels, because it wouldn't, okay? Doesn't behave exactly like shares. So in this case, like I said, you need to put in your target level. I think Joey mentioned anything between $15 to $16. Now let's just put in $16. Now that is about 12% higher from where we currently are. Not overly ambitious, I would say, because 12% is a move I think we have seen, in just one day, right? When it came down, right? More than 10% or so. But, this could potentially happen in a few days, in a few weeks. I mean, I don't know, but this tool, the exposure simulator now, aims to tell you roughly what the ideal number of days the stock should take to reach this target level so that you maximize your gains in the warrants. How so? Now that you have increased that share price to $16, which is your profit taking level, you just need to increase the number of days. Now, what you'll find is as I increase the number of days, what you'll find is the bar here, which shows the change in the warrant value, which is the warrant gains, okay? In this case, it's starting to fall. Okay, so you want to increase it to increase the number of days such that the warrant value would decrease to the point where it matches up to the gains if you have bought the shares. Okay, so the left bar here shows you what your gains will be if you bought SGX shares directly. So in this case, in 23 days, as long as it goes, actually in any number of days, as long as it goes up to $16, which is 12% from here, you will make 11,620, right? If you bought 7,000 shares, okay? But if you had used the warrant instead, right, getting in at about 7.3 cents, like I said, if you got in 7.3 cents, what it would do is during this 23 days where the gains of the warrants equate to the gains of the shares, it would have gone up about 72.6%. Now, ladies and gentlemen, this is between about 6.5 times more than the shares. Okay, so if SGX shares had gone up about 11.6%, this would have gone up 72.6%. But in terms of absolute return, right, if you had bought this number of units because you were trying to replicate the stock exposure, meaning you're trying to replicate as if you bought SGX shares itself, then this tool is telling you that you can only hold for a maximum of 24 days, because that's where the gains in the warrant of $11,700 would equate the gains in the shares. But if you continue holding it, the gains will drop. Why? First of all, you see that the percentage gains have dropped below 70%. Why is that? Well, because warrants have got what we call the holding cost, known as time decay, where the warrant value, the price of the warrant will decay with time. It's a holding cost, right, that you have to pay as a result of obtaining what we call gearing or leverage, right, where you enjoy the geared effect, where it's able to multiply your returns, right? But what you pay in exchange is holding cost, which is something that exists in all financial instruments, right, which provide leverage. So in this case, the more you hold beyond 24 days, you'll find that now the percentage gains are still strong. It's about 67% versus the 12% gain in SGX shares. So it's still about 6 times more, but the absolute price return will have fallen. So meaning if you are holding for more than 24 days, if you're holding for say a month, about 31 days, the absolute return on this warrant would be less than the return that you will make on the shares. Okay, but that's really for those who are looking to really replicate, right? So you're really trying to replicate an exposure as you would if you buy shares. Okay, but if you were just buying it without wanting to replicate, that means you want to get in with just about $16,000 and see what your maximum holding period is. Okay, in this case, you just have to keep increasing the number of days, and you'll find that whilst the absolute price return has gone down, but in terms of percentage return, it is still magnified versus the share price return. So you just keep increasing it to the point where it no longer magnifies, right? So in this case, you hold it for about 3 months, about 93 days, you find that the warrant is only gaining you 12% versus the 12% gain in SGX shares. So what this means is that if you're buying this warrant outrightly without wanting to replicate the absolute price return on the warrants versus the shares, you can afford to hold on to this for 3 months. But if you want to replicate the share exposure, then the maximum number of days you should be holding on to this should be around, about 3 weeks, okay, about 24 days. So this is how you can use the exposure simulator, for those whether or not you just want to know what the warrant investment amount is, the number of warrant units to buy, as well as how it can move like the share, your share price exposure, or if you simply just wanted to know what the maximum holding period is looking at the percentage gain, right? So in this case, if you hold it, let's say all the way, for more than 100 days. In this case, even though SGX shares have gone up 11.6%, you'll find that the warrant is increasing by about 6%. So that's less than if you bought the shares, which is why with warrants, you just can't hold onto it for a long time. You need to use tools like that to know what your maximum holding period is. So to repeat, if your target level of SGX shares is $16 and as it approaches $16, the shorter time it takes to achieve $16, the better your price return, right? So if it happens, in about 2 weeks, it's going to give you a very good price return. If it happened today, which is unlikely, it's going to go about 88%. So the magnified return actually gets eroded with time. Okay, that's something you need to know with warrants. But of course, with this kind of volatile markets, if it moves very sharply in the short term, my advice is to quickly just take your profits, and just exit already. I think what some people tend to do is, $16, maybe it will try to go for $16.50, maybe it will try to go for $17, and then before you know it, actually turns back down, and then you run into losses instead. So back to you, Joey. With I guess again, just to reiterate what the cut loss levels is, and what you do with warrants is likewise. Once the share has gone to the cut loss level, or whether it's $13, or less, what you really want to do is immediately cut loss as well as you would in the shares, right? And what you find is there are magnified returns, but just note that even though it's down about 60%, right, which is again magnified about 6 times more than the share price loss, the losses are in fact, it sounds very scary, right? It's down 60%, but the losses in fact can be equivalent to the share price losses on the share price itself. So this tool tells you exactly how it works. 60% sounds really scary, but if you look at the absolute losses, it's similar to what you will lose in the share during this period of time. Okay, so back to you, Joey, just to reiterate, the profit taking levels. as well as the cut loss levels.
All right, thank you so much, Jamie. I think all of you have definitely learned something on warrants today. Later, we have a Q&A, guys, so not to worry. If you have any questions on warrants, please feel free to ask. But let me just go to reiterate, right? So I think what Jamie mentioned was, a little bit on how you can use the tool simulator tool, right? To really kind of like project, based on how many days it hits a certain target price, what's the potential gain. You can drag left and right and to really see the gains going up and down. So just want to reiterate, guys, for warrants, right? You don't want to just buy and leave it there for like a few months or a few years and don't bother about it. No, right? It's more like a short-term kind of like trading product, all right? So you want the price to go up fast. The faster, the better. If you can go up in 1 week, even better. 2 weeks, good. 3 weeks, good as well. But not like a few months and you leave it there, all right? So the faster, you can see, right, when Jamie actually adjusts the period, the number of days, right? If if the period is much shorter, you can see that the gains magnify much more. All right. So let me just go ahead to just explain a little bit. So what you could do, right? I think Jamie mentioned a bit on the targets. Let's say $15 to $16. Right? It's like an 11 to 13% upside based on the underlying. But for warrants, I think based on like a 21-day, that would be like a 72, more than 72% upside on the warrants itself. So if it's like going up more than 70%, don't say 70, more than 30-40% in terms of warrants price increase. I think it's definitely wise to take steps to protect the profits, all right, from the warrants price already, such that if it goes up and down, it's very volatile. It goes down, you get out, all right, you still make money. You don't want to just go from 70% and then you do nothing and it comes all the way down and 70% gains is wiped out just like that, right? So don't do that. Make sure you take steps to protect profits even faster, especially using more like warrants and tools like that. All right. So in terms of the stop loss, if you're looking at the underlying, what I could do is that you could have a stop loss. What we do is that we normally want to have a stop loss below what we call a trailing support level. So this is the one good trend strategy, right? If we are looking at purely just taking a position on the underlying stock, we could have a stop loss pretty much below the underlying. Let me show you what I mean. So you can see right over here. Let's assume that we have this trailing support previously popping out, right? We could put our stop loss below the trailing support, because as I say, right, let's assume that you got in over here, maybe around the $9.50, $10 level, right? Price starts to move up, trailing support follows it, moves up even higher, and you could shift your stop loss higher and higher, but still below the trailing support level. So you give the stock space to breathe, right? If it's above it, it's good. You put it below, not at, but below the trailing support, such that if it goes below it, well, not so good. You want to get out, right? You can see, so it goes even higher. Let's see what it goes even higher. Yeah, we raise it up even higher. There we go. Pump. There you go. You can see that if it breaks below the trailing support, it will hit your stop loss. You get out. So we use the trailing support as a kind of like a tool, a guide to know where to put the stop loss. All right, and to give it space to hopefully move up. So in this case, you could put your stop loss, just by using the one good trend strategy, it could be below the trailing support, maybe below that 13.20. But if you want it to be even tighter, especially if you're using like warrant as well, you could put a stop loss below this horizontal support level at $14. So below $14, then it could be like $13.90 or $13.95. That's just below. You don't put too near, but just give it a little bit of allowance. $13.85 below the horizontal support as well. That could be another tighter stop loss. All right, if you're using more speculative tools like warrants, right, or in fact much more leverage kind of instrument, I think a tighter stop loss will be good as well. All right, Ken, Jamie, anything to add?
No, I hope the demonstration was worthwhile and useful for you. But if you had any more queries, of course, we have a seminar tomorrow in our office where we provide dinner and educate you a little bit more over dinner on warrants tomorrow. So if you're keen, maybe you can sign up. Joey will share the link, but it's available on warrants.com.sg. We can sign up for the seminar tomorrow, which will happen from 6:30 to 7:30 p.m. So we'll tell you a little bit more if you've got questions that you're not able or you need some time to think about before asking. We are happy to take the questions there, or just more like a further explanation of the concept. We don't have enough time on this show. Is really just to give you an introduction of the knowledge of existence of such a tool, which can help you amplify returns in the short term, and which can help you minimize the amount of time that you are in the market. Okay, so if you want to know more, there's also the seminar tomorrow, which I will be conducting, and it's free of charge.
Nice.
Hopefully, we can see you.
Yep. So I placed the link in the chat, guys. Check it out, right? That's a webinar. No, it's not a webinar. It's a seminar, right? It's a seminar in Macquarie's
That's
office,
right.
right?
That's an over dinner, correct?
Wow, there's dinner provided as well.
Yes.
Nice.
I think with some food, hopefully the brain gets a bit more active.
Okay.
I know I'm like that. I can't think without being, having my stomach filled. So, any
Okay.
questions on warrants? I think, Joey, you've got some of the followers who are asking about other stocks.
Yep.
Maybe because they
Maybe for
think
other
that they
stocks, maybe okay.
ask me anything. So sorry, Michael and KKK. I think Joey would separately um, potentially talk about that on another
Yep. No worries.
show.
So basically, guys, I know some of you are asking about the stocks, right? So today, take note, guys, it's not our weekly Friday Ask Me Any Stock session. So for that, right, we can go ahead to join us on Friday. Join us on Friday. That's where we'll cover. I think this Friday we'll be having the Singapore stock, right? Singapore stocks. Go to the YouTube, go to my YouTube channel, all right, and go ahead to follow, right? Follow, and that's where you can join us when we go live. But we have some time, Jamie, maybe about like 10-15 minutes. Do you want to maybe go ahead to answer some questions or warrants, or maybe guys, you have any questions? You can type in the chat any questions on warrants, specifically a little bit more in-depth, advanced. We could try to cover them if, since we have Jamie right over here, the expert on warrants. Jamie, you could do it, right? Got some time?
Yeah, no, I mean, typically on your show, we tend to get so many warrant questions that we'll end up, like this show will drag on for an hour and a half. But
Okay.
if we've got no questions today, I guess maybe one of the questions I would like or frequently asked questions I could address with regards to SGX specifically is maybe the question on whether being a warrant holder will entitle you to dividends or not. Because
nice.
I say that because, just now I've talked about how with the exposure simulator, we aim to use the tool to show you how you can replicate your share exposure, right? So we want to replicate your exposure as if you were holding on to SGX shares directly. But the thing I need to point out is when you use a warrant, right, to participate in the share price move, you are not a shareholder, right? And as a result, when they do announce dividends and they pay out dividends, you are not entitled to it at all. But what does it mean? Does it mean you're worse off when the shares go ex-div? Because as we know, theoretically on ex-div dates, the share price should follow like the dividend amount, right? In this case, if the warrant, whether it's a call or put, are traded on ex-div date, it will not move for the share price drop. Okay, because why? Warrants are already have got dividends, ordinary dividends factored in. But where there are, special corporate actions such as special div, which are not priced in, which we cannot foresee, then yes, then those potentially we will need to adjust the warrant so that as a warrant holder, you're not worse off. But no, as a warrant holder, just to, in short, answer some questions you might have is that they do not entitle you to dividends at all, okay? But you're also not worse off when they pay out dividends. Now, I think we have got one question from Louis CS. How liquid are the warrants? Well, this is a good question, Louis. Well, the whole idea of warrants having a market maker such as Macquarie is to provide liquidity. And what do we mean by liquidity? Whereby there is bid and offer volumes on both bid prices and offer prices so that investors can easily transact in and out. So to answer your question, I'll just point back to warrants.com.sg, where on the warrant search page, okay, what you will see is bid and ask prices, but also the bid and ask volume, okay, meaning where Macquarie is putting up liquidity. And then, of course, there's the traded volume, which is how much others have transacted in the warrant already. So in this case, for example, this Alibaba warrant here, for example, it's 5.5 cents bid, 5.6 cents offered. It's basically got 5 million warrants on the bid and 5 million warrants on the offer to transact. Now, how much has transacted? About 4.4 million. So the liquidity varies from warrants to warrants. What you're going to find is that those with tiny liquidity, the liquidity you see that it's really small, right? Typically, those also have got wider spreads, which is our way of telling you to not trade the warrant. So you can see here, only 250 250,000 warrants on the bid, 250,000 warrants on units on the offer. Why? Because this is on wide spreads. We widen the offer, we make the offer price more expensive so that you will not buy it. Why? Typically because it's very short dated, it's going to expire soon, as you can see here, or what we call it's got very high or low delta. Okay, so it's our way of telling investors, warrant investors, which warrants to go into and which warrants to avoid. And we usually have the fire logo to make it easier for you to quickly identify which have got the highest liquidity. So I just want to zoom into SGX, for example. So SGX here, where we've got the fire logo over this call warrant here, it's got 120,000 on the bid and 190,000 on the offer. 835,000 have traded. Why is it lower than Alibaba warrants? Well, because generally Singapore shares are a little bit less liquid. The shares itself are less liquid than Hong Kong shares, such as and by Hong Kong shares I mean those blue chip names like Alibaba, where they've got tens of millions of units of shares on the bid and offer, and as a result, because SGX shares don't have that, typically there's 10,000 on the bid, 5,000 offer. Therefore, our liquidity is also not as high, but we've got 120,000 on the bid and 190,000 offer. So more than enough for you to trade in and out of. We provide the liquidity because even if there is no one trading the warrant, you will always have liquidity and the ease of entering and exiting from the warrant. Okay, so that's I hope that answers the question on how liquid are the warrants specific to SGX.
Very powerful. I think we can see that make sure guys you want to choose the warrants that is most liquid. I mean, it could be like several warrants. I think JB has mentioned that there's the fire, hot sign fire there, right? So that will probably be the warrant that you want to pick. Don't just randomly pick those that's going to expire like in a month or something like that. Yeah. All right. Okay, good. Let's see if any questions. If not, then I think we pretty much come to the end of today's session. Let's see. Okay, so I think no more questions for today. So I think, that'll be good. That'll be good. That's it for today. All right. And I think we call it the end. JB, anything to add before we end today?
Well, I think these kind of markets currently feel very precarious, right? Everyone is just sitting on the edge, don't know whether to enter or not, because if you enter, you don't know if it's going to turn down again. And we share that sentiment, which is why we're talking a lot about the usage of warrants, in such markets where, instead of just buying and holding, perhaps you want to explore a strategy where you're really just trading, technical levels, right? Because the swings have become even larger than what we are used to seeing, and hopefully there is an instrument that helps you to maximize your gains when your view is right. I think that's really the whole purpose of warrants and wanting to introduce it to you, so that you know how to make use of such an instrument to really maximize your returns by minimizing your time in the market. But of course, if you are a believer in buying shares that are fundamentally strong, which pays out good dividends, gives you a good dividend yield, and which you think is very cheap at the moment, then go ahead and buy the shares directly, right? Warrants are really for you to really just trade maybe short-term levels, short-term momentum, short-term swings and moves, and there's availability of both call warrants for you to trade the upside where you think it's going to go up, but there's also the availability of put warrants for you to trade the downside. So for example, where there is bad news again in the market and you think, they're at the levels where maybe buying has ceased or people are scared, then you can consider actually using a put warrant instead. You can buy into it to hedge the short term or just simply to profit from the downside. Okay, so hopefully the knowledge of warrants, and if you want to understand it more, come for our seminar tomorrow so that we can help you really navigate the uncertainties in such a market. But mostly I hope that this stock idea of SGX bears fruit, and hopefully we can do a positive recap of this idea, whether it's via the stock or the warrant, in our next One Good Trade show.
Okay, thank you so much, Jamie. Very good sharing on warrant today. So hope all of you have learned something today. So do check out Jamie's seminar tomorrow as well. You can ask any questions and she'll dive a little bit more in depth as well. But today, One Good Trade live show, just to give you guys a bit of an opinion on this stock called SGX and how warrants could help you as well. All right, so thank you so much for being here. And as I say, guys, if you want to find out a little bit more in terms of the entire One Good Trend strategy, and so how perhaps you could have a tool like the One GT Pro indicator that I've shown you, right, just to get an opinion in seconds on any stocks, check out, attend one of those free webinars that I have as well. I think we have one next week. Check it out. The link is in the chat as well. All right, so take care, everyone. Thank you. I'll see you again in our weekly Friday AMA session. Of course, we'll see Jamie again, probably next 1 or 2 months. All right, and we'll talk about the next one good trade stock. All right, take care.
Thanks,
Bye,
everyone.
everyone.
Take care. Good luck.
Bye. Bye.